All right, JJ, stick around. We're not done with you. We've got more on the way, another exclusive interview. Next up, let me welcome to the stage Kyle Shenfeld, the president at Rainbow Realty Group. Come on out, Kyle. And following him is Ben Bolanos, COO at Rainbow Realty Group. Let's give him a big Benzinga round of applause. Come on, put those hands together, people.
Good to see you. Good to see you. So, kind of following up on what we did in the last round, I am thrilled to be talking about this round because these two young bucks have taken the industry by storm, and they've done it in a way that is so old school, retro, by taking what was traditionally something that school boards and firefighters and banks all would do because it was safe. They've turned it around and revolutionized the industry with Rainbow Realty. And as a U.S. Bank board member, regional board member, we're a very conservative organization, and we love vehicles like this. So let's start off with the big picture first. You just heard us talk about it. What do you think of the industry today?
Yeah, I'll start there. The industry, it's kind of in an ironic state, I would say, actually. Like, the companies themselves are getting smarter. There's a lot of M&A. The companies are getting stronger, and yet the valuations on those companies have gone way down. Right?
Yeah, I mean, big picture, we love the industry and what it is doing for America in terms of jobs, in terms of, bringing opportunity to people who didn't have it, handling medical issues in America, from opioids to, personal preference for, so we really support the industry. I think from, what's happening from a stock perspective, we're not really focused on the noise because we see the fundamentals of these businesses improving month over month, year over year. And as more states come online, we see the opportunity for the MSOs, which, obviously the ETF is down 60% from the highs earlier this year. But you also have to remember it was up 100% prior to that period. So these stocks are thinly traded. The stock market is not reflective of how we think of this industry and where it can get to. And so we're really excited, JJ. Like, we see this as something great for America, and we're in it.
Well, and what I love about them, and Ben's great about this, is they look past the initial picture and see what the potential is. Beer profits are down, but when you look at the real numbers, beer sales are up. So, and they look at that and look at the potential of what's going to happen. The industry is not going to go backward. It's only going to grow forward, but every industry has a little hiccup. But they, because they're so smart, have gone into an old school REIT. And so you talk about Rainbow. We love the name Rainbow.
Well, I'll give you 2 minutes on kind of the history of who we are, if that helps.
Oh, I think everybody's biting at the chop for that.
All righty. I can tell. So my family's business has been in the real estate industry for 60 years. New York City real estate family. We run 2 REITs, both of which trade on the New York Stock Exchange. One's called OLP, One Liberty Properties. The other's called BRT Apartment Corp. Through both those vehicles, we've done traditional multifamily lending, sale leasebacks on traditional real estate for 6 decades. And as a family, we got into the cannabis industry about 10 years ago. We initially put up the money for one of the first 6 New Jersey licenses, a facility called Breakwater in Cranberry, New Jersey. Probably 5 years ago, we got more active in the investing. 4 years ago, we saw a real estate angle, which we loved. And so we started a fund. We did our first fund. We bought our first deals for our first fund in June of 2018. We closed that fund in November of 19. It was a $50 million vehicle. Now we're doing our second fund, same products. We do sale leasebacks and we do mortgages of real estate. That's what we know. I was just talking with Ben about, how different Canaccord was, 3-4 years ago when I went, and it's been a fun ride. We're still kind of, I think, in the second or third inning of this industry, maybe. But yeah, we've come a long way, and we like where we're going, but there's plenty more to go. So it's exciting.
I think that is exciting. So when you deployed this 50 million, where? Is it Northeast? Is it around the country? Obviously, it's not in Alabama.
It's not in Alabama. We have a facility in Iowa, actually, a lot of it in California, Nevada, Michigan, West Virginia, Missouri. Am I missing any? Colorado, Oregon.
And when you say, so what type of, I mean, is it just grows? Is it retail store? I mean, it spans, you might say it's a rainbow of opportunities, perhaps? You
could say there's a pot of gold at the end of this rainbow too.
Ooh, I like that.
Part of the idea.
Only one of us does comedy, though. So.
That's you. My bad, JJ. No, but our underwriting is focused, again, I mentioned the family's real estate history. Our underwriting is focused on traditional real estate. So, we'll do industrial, right? Processing or grow facilities. We'll do retail, dispensaries. We'll do lab testing, right? Those are like high grade medical office buildings. We'll do basically we'll even do greenhouse, right? Like we have a greenhouse deal in Nevada. It was formerly a cucumber and tomato farm.
Oh, wow.
Yeah. So we'll do, virtually any real estate product, so long as it's got a real estate non-cannabis usage that we can get our head around. That's our whole underwriting.
And obviously, licensed facilities, medical, adult use, we'll consider it all. We also have capital for hemp as well, if anyone's interested. And yeah, we're targeting any state as these states come online. There's no necessarily target markets that we look at. The goal is to build a high quality portfolio of real estate assets that just happen to be licensed cannabis facilities.
Right. And that's the key, that they're licensed. There's plenty of others, some people do construction, some people do entitlements. We don't do zoning. We do licensed facilities, and we finance projects that are about to be on board or already exist.
So you let them do a little of the front work, and you come in and say, let's make this dream happen.
Yes, they're all different sort of parts of the capital stack that you could invest in. You could invest in pre-license and expect to make a much larger return. We're investing post-license and still making double-digit yields, but we think we're taking a lesser risk than others who are looking for more yield.
Well, and that brings me to my next question. Growing up, y'all may be surprised by this, but I'm from the South, and so many of families put a lot of their real estate holdings in REITs and then grow from there. So REITs are very traditional vehicles because over the long term, real estate rarely ever goes down. It always go up. Now there's blips, but in general, real estate generally gets more valuable. Talk to us about how Rainbow is a little different, or is it any different than a traditional family REIT or something you might say that a school district has invested in?
Yeah, I mean, I'll take that one too. It's definitely different, but just because of our tenants and just because of our borrowers, right? Like, again, I try to emphasize this always, but like the reality is we underwrite the real estate the same as we would in any of the other companies that we control. We look at the real estate, we look at what it's worth on a per square foot basis. We figure out what a non-cannabis user would rent the space for, what it would cost to retrofit that space for a non-cannabis user, and we back into a value. So risk-wise, we think it's quite similar to the other REITs that we run. Reward-wise, because of the lack of financing in the space, you're getting 2 to 3 times the yield you otherwise would. So we think it's a mispriced risk-reward.
Do you want to say that again? I just want to make sure everybody heard that.
We think we're taking a normal real estate risk with 2 to 3 times a normal real estate yield.
And that is, when we started the Fresh Toast, a lot of people were like, I'm going to jump into this area that's going to flip, and I'll make 100 times my, $1,000 in 6 months. Real estate takes a little time, but is traditionally a good investment because real land still stays every there. So I've known these guys for a little bit, and I know Ben's crazy smart. Kyle and I are just getting to know each other. You, because of your histories, must bring other value to the operators that are in this. I mean, so people who work with you and rent from you aren't just getting an absentee landlord. Y'all are more of a landlord who can really help somebody understand and grow the business, correct? Tell me how that works.
Absolutely.
Maybe it's wishful thinking, but I think when we invest in a company and put, the rainbow stamp, well, not invest in the company, invest in the real estate for a company, I think we're, part of that team. We're going to help that company be successful. We can help them on a lot of the things that they don't really know about, from insurance to construction to managing the property. So they can go worry about the things that they do, which is maybe grow product or sell product, whatever it is. So, we simplify a lot of the things that they don't know. And frankly, a lot of the borrowers or tenants that we work with, this is their first or second real estate transaction they've ever done in their entire life. Maybe the other one is their home. And so, we simplify it. We make it easy. We hold their hands. We are a high interest rate lender to a degree, but we're not a hard money lender. We're a partner to these companies. And our goal is to turn business into repeat business. And we've started to do that. We're doing our third deal with a private equity company in New York. And some of these public companies like Body and Mind and Marimed, those guys are hopefully going to be repeat customers for us. And, we're excited about repeat business. And so doing the right thing by these guys is critical for how we run our business.
The other thing I'd add is again, we're limited on what we can do in terms of LTV, in terms of proceeds. We're underwriting non-cannabis real estate. A lot of the times, Marimed or any other borrower is going to want a project that's above and beyond my view of the real estate. Right, the equipment is expensive, the lighting is expensive. So we've done deals like that, where we actually partnered with equipment lenders in the space that we're close with. And, we took a senior piece of a loan, they took a junior piece. We're trying to solve for sort of a 12% yield. They're trying to solve for, a higher 17 or 18% yield, but we were able to do the deal together in a senior junior, blend our rate down to like a 14%, which for a full project's capitalization is not bad. So, it's a small industry. People know that for sure. And it's, we work with, again, equipment lenders and guys like inventory financiers who you might consider competitors. We try to work with them. Again, the idea being we want to give a cannabis company, as much or all of what they're looking for.
So I know this little, what do you think is the number one mistake people make as they try to enter the industry that y'all have seen? Because y'all are great partners and you've developed some wisdom over the years on this.
I mean, we've certainly seen people get, ahead of their skis, taking on too many projects at once. It's a difficult business. It's hard to cultivate cannabis consistently. It's hard to employ sales force across numerous dispensaries. So, we sort of want to see companies grow at, a steady pace, and, the guys that have gone too quick, trying to just get as much revenue as possible, overpaying for assets, that's sort of I think where a lot of companies are right now, and why, some companies are struggling.
Yeah, like we see, just to piggyback off that, we see companies that we're going to do a 200,000 square foot build out, and we're going to have this grow, and we're doing it all in one phase. And I'm like, that's crazy. Like, why don't you guys do it in one phase? I'll finance half of it, grow out of that, grow out of your cash flow, and build a business more organically, so to speak. But people see prices are high still in certain states, and they want to, it's just a race to scale. And yeah, I mean, it doesn't quite fit in our model, again, because we're limited on the proceeds we can provide, but also just, from a intelligent business standpoint, we're trying to encourage people to go a little bit slower. And we think it makes sense to grow out of your own cash flow versus, taking on debt. Again, like we're one of the cheapest lenders in the space, and we're still in the low double digits. So it's expensive.
And so and then on the flip side of that, what would you say is the two smartest things that the people that you work with have done that you would say is really a benchmark that anybody who's either investing or going into the industry should really keep top of mind?
I mean, it seems
other than work with Rainbow Realty.
Other than work with Rainbow Realty, I mean, the biggest thing we've seen, I mean, this is still most businesses are relationship. And so, companies that are successful have great teams of people, where they're delegating who's doing what responsibilities. It takes a large team to build these companies with, the ambitions they have. So that's certainly number one. And then number two is winning these licenses probably. It's not easy. It's competitive. I spoke to 30 people today who are all convinced they're going to win a license in New York. It's not easy. And so, that's sort of the first step.
So out of 30 people going after it, how many licenses are available?
I don't even know if
I think
they
it's going to be around 300.
Yeah.
Well, so there's a chance, but chances are some people, because it's a tough business.
We're focused. Once those guys win their license, hopefully we're their first call. And we're helping them, with the real estate part of it, the build out, we can be a part of that.
New York specifically, we happen to own real estate around the city and in the boroughs and in Long Island. So, we can come in as a partner with kind of some vacant retail we already have as well. So
You might say you're a little turnkey then on that.
I try to be.
That's good. And so do you have any words of wisdom for the crowd?
I don't know. The crowd seems pretty smart. The fact that they're all here is a good sign. I mentioned I think we're still in kind of the second or third inning of this industry. We've got a long way to go. The taxes are still crazy with 280E. If that ever gets sorted out, these cannabis companies are going to, boost in value pretty significantly. So, I think keep learning about cannabis, stay in this industry. I would recommend if you're going to invest in the industry, make some direct equity, investments in the companies for sure. But if you're trying to be a little careful with your money, I might recommend investing 75% of your cannabis allocation in something like Rainbow and 25% of it in something like a startup or a mid-sized company that you think has a lot of growth potential.
Well, and that kind of brings us to kind of the closing. You provide a lot of benefit to the operators. Tell me the benefit that you bring to all your investors.
Yeah.
And what's a reasonable expectation? Unlike earlier on, you could go to a conference, especially like at MJ BizCon and so forth, and you would have people saying, I could triple your money in 12 months.
Right.
That's just not realistic. And if anybody says that today, I would be a little wary. So
yeah, no, that's well said. Look, I tell investors in my fund, like, this isn't a way to get rich. It's a way to stay rich. Again, like, we're trying to take a typical real estate risk and we're trying to earn an outsized return for that risk. In our base case, we're raising a second fund right now. The first fund's performing really well. We just distributed over $1 million last quarter. We're distributing now 9% quarterly. Again, we think we're going to make a lot more than that at the end of the day, but we're able to do quarterly distributions right now, which is a bonus. In the second fund, just numbers wise, like, we think our investors, net of any costs, are going to make between an 18 and 19% IRR if we hit our upside scenario in kind of the base case where we're just turning over these loans and these real estate and we don't get great leverage and there isn't some cap rate compression through an exit or something like that. Our investors are still going to make a 12 or a 13 IRR. And so, again, it's like if you have money and you want to put some of it to work, we think this is a great risk reward. My family's got a whole bunch of our money in this too. And so we invest like principals because we're trying to protect our shirts as well. So.
Well, and y'all are smart, so that helps out a lot. So you're talking, so once again, 12%
IRR, yeah.
Oh, that's
base case.
That's
in our
a
base
lot better
case.
than we do at US Bank.
It's okay. The U.S. Bank isn't investing in cannabis, which is.
No, we're not going to invest in cannabis. We're
not
very
yet.
Old school. Once CalPERS does it, we'll do it.
With Rainbow.
Oh, duh. I'm a regional person. I'm not a national person.
Gotcha.
So anything that you want the crowd to take away?
We have capital that we are looking to allocate in this industry. It's for a specific, use, real estate. But, if you have a license and you have a property, consider us for being part of your capitalization of your business. We're happy to talk with founders to learn about, what they've done, how they've gotten to where they've gotten to. We really enjoy it. I don't know if you could tell. And, we're also, happy to work and we're doing some initiatives to help the social equity side of this business, which we support greatly. Obviously a lot of the licenses that are going to be won going forward are allocated for social equity, and we want to be a big part of that. We want to help those businesses grow. And so, if that's who you are, feel free to reach out and we'll let you know how we could be helpful.
Yeah, no, in terms of a takeaway, I want everyone to take my business card. We're still raising money for the fund. We're looking to put that money to work. Ben said we're working on a social equity initiative on the side. working on with another potential capital partner. So, we want to be helpful to cannabis companies. We want to help them grow. We want to do it responsibly. So take our information and reach out to us, and let's see if we can be helpful.
So, and to be clear, so anybody in this audience afterwards can come up and talk to you all throughout the rest of the conference.
Absolutely.
That's your takeaway for today. Look, y'all have been fabulous. Thank you for taking the time out and meeting with us. And we hope you have a very productive afternoon. Give them a big round of applause.
Thank you. Thanks, JJ. Thanks, JJ. That was great. Good job. Appreciate it.
And I'll walk off with you.
All right, guys. It's that time that many of you have probably been waiting for. But before that, let's get another round of applause for JJ, and the folks at Rainbow Realty Group. Thank you, guys.